managerial accounting multi-product break-even analysis. Now, we've seen how to calculate break-even point for a business that has a single product. Now let's look at an example of how to calculate break-even point for a company that has more than one product. Now, we're going to simplify the example by having only two products. And in this example, what we're looking at here is an income statement, a contribution margin income statement for a company that has two products, the show product and the money product. Now, the first thing that we want to do when we have multiple products in a business is we want to figure out what the sales mix is for that company. The sales mix. And the sales mix refers to the proportion of total company sales, in this example $10,000, that is made up by each of the individual products. So for this company, again, total sales is $10,000. The show product represents $4,000 of that total of $10,000. So 4 divided by 10 is 40%. So show accounts for 40% of the sales revenue for the company. And since they only have two products, it's pretty obvious the other 60% must come from money. But let's take a look again at how we calculate that 60%. Money generates $6,000 worth of sales. So 6,000 divided by 10 is indeed 60%. So our sales mix for our two products is show accounts for 40% of total sales and money accounts for 60% of total sales. Now, once we determine sales mix, the next thing that we need to figure out is what is the weighted average contribution margin of all products to the company-wide profits. So remember, sales minus all variable expenses equals contribution margin. So for this company, show has a contribution margin of $1,600. That's $4,000 minus $2,400 is $1,600. And money has a contribution margin of $1,500. Now, individually by product, show's contribution margin, $1,600 divided by 4,000, is 40%. And money's contribution margin ratio, $1,500 divided by 6,000, is 25%. But what we need to calculate the multi-product break-even point is the weighted average contribution margin. And to find that, we look at the contribution margin for the company as a whole. The company as a whole. So for the company as a whole, there's $10,000 in sales revenue, $6,900 in variable costs. So contribution margin is $3,100. And $3,100 divided by 10,000 gives us a weighted average contribution margin of 31%. And that's the number that we're interested in. The other number that we're interested in from this multi-product contribution margin income statement is total fixed costs. Because remember, break-even point is calculated as total fixed costs divided by contribution margin. So total fixed costs for the company as a whole is $1,085. So that's the three pieces of information that we need in order to calculate multi-product break-even point. We need the sales mix, what proportion of total sales revenue is generated by each product. We need the weighted average contribution margin, and we need the total fixed costs for the company as a whole. And with that information, we'll be able to calculate break-even point.